Eric Mother.com. Today let's take a look at why I think we should not always be looking at price action, because price action can be misleading. For example, if you take a look at the current S&P 500 30-minute chart and you draw a channel here that looks something like this. So there's a nice channel here. Let me draw it a little bit different. So it looks something like that. And you can see that the market took advantage of the movement above and outside that channel for a nice entry in terms of price. So anybody who was using that as a breakout had a good reason to do that, because the market was finally coming off this downtrend, and so it looked like the market was coming back and now was breaking out above that channel. So that was a buy signal, and anybody who bought there at that point probably has a good reason to continue holding on to the market, waiting for another push higher. Today we are seeing the market pull back a little bit. I want to explain why we should always consider the RSI as opposed to always just paying attention to price. If you go back to the weekend analysis video, we talked about this level here where the S&P 500 had broken down towards late December, and that break brought the market off the highs of December, and of course we've been down since. And I discussed the idea that the market was coming back to test that red line. So right now, even though if you take a look at price seems to be telling you that the market is a buy based on this previous channel work here. The problem is, even though the market did give a slight buy signal for those of you who like to trade short term, now we are running into trouble here, market showing short term resistance. So I would suspect that as long as the market is below the red line, the RSI is more of a more accurate representation of what is going on. In other words, price might be misleading in this example because we are looking at the RSI telling us a little bit different on how to look at the market. And in fact, if you take a look at the S&P 500 hourly chart, not the 30-minute chart, which we've been looking at, on the hourly, we can see that the market is coming back and is doing some type of a back test on the SPX. So you can see that this line was the break point coming into early 2016 for this drop here. Of course, we've been down since, and now the market is coming back and is doing a back test of this level. So as long as the market is showing RSI resistance, irrespective of what the RSI channels are showing us or the price channels are showing us, so there's a price channel that we've been looking at, as long as the market is, yes, we can see the channel here, but until we can clear that line that I just drew on the S&P 500, so let's draw that again, until we can clear this previous break line and now a backtest line right here, until we clear that, I think we can use the RSI's information as opposed to the price channel information here, which might suggest that the market is due for a pullback. And where else do we see that? We see that on the Dow Transports Daily, because if we take the highs on the Dow Transports Daily, as discussed during this weekend's market analysis video, you can see that there's a trend line here that the Dow Transports seem to be struggling to hold above this, which is the previous RSI highs on the daily. And here we have the risk of the Dow Transports moving below 30.90. On the day they move below 30.90. Expect a big down day for the Dow Transports and probably also for the general market. So all these things, if we take a look at our RSI work as opposed to taking a look at price work, looks like the market is more and more confirming resistance. Eric Mother.com. As always, good luck, peace, and blessings. EACS. Mwah.